All right, ladies and gentlemen, MrSotko here. Welcome back to the channel. We got a whole bunch of news stuff for you today, but our main story focuses around an attempted assassination of Alexander Vinnik. So if you don't know who Alexander Vinnik is, come, take a seat, sit around, and listen to the story. So an assassination attempt on Alexander Vinnik took place in Greece as he awaits his extradition into Russia. So Alexander Vinnik, one of the individuals behind the btc-e money laundering scheme and the Mt. Gox hack, who's currently waiting for his day in court, was the target of an assassination attempt in Greece. So Greek law enforcement received intelligence on plans to prepare an assassination via poisoning with the help of criminals. I wonder who else it would be with the help of. Probably criminals. The head of the prison and the prosecutor of the city of Thessaloniki. Ooh, that's a good one. Always trying to get me with your big words. Summoned Vinnik and informed him about the plot to poison him, and special security measures were taken in connection with that, said one anonymous source. So the prison where he's staying is now adopting a special security protocol to ensure that this doesn't happen again. Kind of unfortunate. As for the identity of the person who attempted to murder him, sources claim that the attack was planned by an unknown Russian national, which makes a lot of sense because he was going to get extradited to Russia. So it all began after Vinnik's extradition to the United States was blocked. There are some people who are extremely interested in him not coming to Russia. The assassination was ordered by some unknown person from Russia. So I guess if he gets extradited to Russia, there will probably be some kind of court proceedings, and other people might get named. So this event proves that Alexander Vinnik wears quite a large target on his back, one that he cannot shake off. He is suspected of laundering anywhere from $4 and $9 billion through btc-e. In addition to being wanted for the U.S. for money laundering, he is also wanted in Russia on fraud charges. So the U.S. Treasury Financial Crimes Enforcement Network alleged that BTC assisted in financial crimes, giving the exchange a fine of $110 million. Oh, only $110 million for their $9 billion laundering. Okay. This worried people who stored their coins were there as they believed it wouldn't be able to pay them back their balances. So the exchange through which Vinnik laundered money has since been shut down, but not before it came back from the dead. In the middle of September last year, the exchange went through several changes, including transferring its ownership in order to be able to refund its users. So pretty interesting. So he was one. He's apparently he's not the hacker. I'm not entirely sure. There's not a lot of information about that. So, but he was helping launder money from Mt. Gox. So now, of course, before we even talk about this, I have to have a big disclaimer that, of course, I don't promote assassinating anybody. But it kind of makes sense to me that somebody would want to do that. One, because of the billions lost in the Mt. Gox hack, and then two, he probably worked with a lot of people, and if he goes to some kind of court or something like that in Russia, there would probably be other people named. So Mt. Gox was a big thing because when Mt. Gox went down, I mean, we were seeing Bitcoin in I don't remember the exact date, but anywhere from $500 to $1,000. So anybody that still had their Mt. Gox Bitcoin today, a lot of those people had a lot of coins because mining coins back then was a lot faster than it is today. So if you had the same hash power or equivalent to somewhere near there than when you did it in 2014, you'd be mining a lot more, to say the least. So all these coins would be worth, a lot of people there'd be a lot more millionaires, let's just say, in the world. So that is an interesting article. So nvidia braces itself for a rough ride following lower demand from miners. So apparently, in the beginning, nvidia didn't know anything about it. They just didn't know. They're just like, oh, we don't know nothing about mining. We don't know how much of our money is going towards miners. Let me tell you, nvidia, it was probably like 80% of it, because as a gamer, I only need one graphics card. One, maybe two for SLI if you're really into it, which I had SLI for a while. Don't recommend it. It's not really worth putting in the money to get like 10 extra frames on a game, maybe, and that's 1 in 10 games. So you need one card, right? One card every year, maybe, every 2 years when a new series comes out, and Nvidia's wondering how all their cards are being sold for $1,300. I think they knew, but I think they were just playing it off legit. So now they're bracing themselves for a lower demand from miners. Very unfortunate, Nvidia. So Nvidia is looking bearish. And before I even read this article, they haven't made a new graphics card series in like 2 years. 1080 Ti came out a couple years ago, the 1080 series, the 10 series, if you will. And they've been pretty lazy about it because they've been just reveling in all the money that they're making and the fact that they don't have to make anything new, because why would they if their sales are this high on their current GPUs? And they've been very, very sluggish about making a new GPU series for a couple years now. They're about a year late. So NVIDIA is looking bearish as the company doesn't have any good news to share about its GPU sales during this quarter. Its most recent quarter report and forecast suggests that the decline in demand for crypto mining is hurting the company. How about the decline in 1080s and the 10 series? We need an 11 series to boost our mining capability. I guarantee NVIDIA, as soon as you release that 1100 series, everything is sold out instantly. The chipmaker projects that by the end of 2018, Q2 2018, sales to the cryptocurrency-oriented customer will dive by as much as 2/3. Yeah, because you're not producing any more graphics cards. Seriously, NVIDIA needs to hire me stat. I will take, let's go with $110 a year, 110 a year, 110K. And I will be your consultant. So NVIDIA, please email me, because you guys are, wow. You guys are totally, these are like those like anti-smoking commercials in like the 80s and 90s where they're just like, yo, you want to be cool? Smoke a cigarette, kids. Like they're totally out of touch with actual kids and like why they would do these things, or these kids commercials. And they're like totally out of touch. It's like some like 45-year-old man with a hat on backwards, and he's just like, yo, what up, kids? You shouldn't smoke. Totally out of touch. They have no idea what they're doing. They know how to produce cards. They know how to make money. Other than that, they're just totally clueless as they're moving through the fog. So even keeping in mind that the company makes its revenue from gamers that earned $3.21 billion in revenue in the first quarter of this year, a loss of $200 million in potential revenue has investors watching because you refuse to release your new series of cards. NVIDIA has taken a hit in its stock price and is down $5 from Thursday. Joseph Moore, an analyst at Morgan Stanley, isn't too worried about the drop in demand from miners, projecting NVIDIA's stock price at $273 per share. He said that the market would settle once the company pulls through the turbulence. What turbulence? There's no turbulence, I promise you. People want to mine just as much as they ever did. Look at the mining difficulties and look at the overall mining. It's just the same. People were mining through the dip, just the same. Cards went down a little bit less demand, but mostly because their cards aren't making them what they want to be making, and that's why they need the 1100 series. So NVIDIA is not only the only company looking at red spreadsheets this quarter. Board manufacturers in Taiwan make their orders from the company are also bracing themselves. So there's a lot of reasons for that, but NVIDIA, you guys are a 90s kids commercial. You guys are totally out of touch. GTX 1080 Ti's, just to show, we did see prices at like $1,300, $1,200, and $1,300, and now we're seeing that about $1,000 and $900 to $950. So this is clearly showing how a demand has dipped a little bit. But at the same time, even the venerable 1080 Ti, which is essentially the best card you can mine with, other than the XP and the Volta or whatever. But those are ridiculous, and there's no reason to buy them to mine. Have you ever noticed that you've never heard anybody saying, I mine on my NVIDIA Titan XP? No, you don't. The reason why is because there's several $100s more for maybe like 20 cents more a day or something like that on your card. Not much at all. The hash rates are virtually identical. Be a little bit better on a Titan XP. But for how much you pay, it's totally worthless. And the fact that they're not made in bulk compared to the other ones. So this is kind of interesting. And the reason why I showed this article, I'll tell you in a minute. So Zimbabwe's central bank bans local banks from dealing with crypto-related payments. So if we knew a little while back, Zimbabwe was valuing their Bitcoin at a lot more. So at $8,300 to $8,700, Bitcoin was trading in Zimbabwe at $12,400. Zimbabwe has undergone massive inflation, and they basically they started to use the U.S. dollar, but before that, they had basically $100 trillion bills, literally, and so their inflation was so high that they actually had to physically walk around with $100 trillion bills just to equal, a jug of milk or something like that. So that is inflation for you. And so I find it very ironic that the central bank, who clearly can't run Zimbabwe very well with their inflation, would want to ban crypto-related payments at this time. So in Zimbabwe, people who trade Bitcoin say they consider it a safe haven asset, given that their bank deposits in fiat currency drop in value each day. Others say that they like Bitcoin because it lets them shop online or fund family members. Note that the Zimbabwe dollar was demonetized in 2015 after a period of hyperinflation. Instead, people use currencies like South African rand, pound sterling, U.S. dollar now. So again, before 2015, there was like $100 trillion bills of Zimbabwe dollars. So I find this all very ironic. I find this very, I hate to use the same word, but very out of touch from the Zimbabwe Central Bank that doesn't want to accept crypto-related payments, something that actually isn't hyperinflated. Just the world we live in, Goldman Sachs opens Bitcoin to institutional investors. So they're now starting to do that. So following a slew of inquiries from hedge funds, foundations, endowments benefiting from Bitcoin millionaires, Goldman Sachs has become the first regulated financial institution to afford clients the ability to trade Bitcoin futures via one of its New York desks, according to Forbes. So what this means is that Wall Street Titan will essentially help shepherd the herd of institutional investors into trading of Bitcoin. So Goldman Sachs does not actually trade Bitcoin, of course. Rather, the bank will trade Bitcoin futures contracts for clients using its own funds, in addition to non-deliverable forward futures. Such a glowing endorsement from the most profitable securities firm in history should undoubtedly signal confidence in not only Bitcoin, but the cryptocurrency market as a whole. So they are fashionably late. The injection of investment funds into the cryptocurrency market comes after eToro senior analyst Greenspan predicted a wave of Wall Street investment entering the space. Specifically, he explained that institutional investors were interested in catching Bitcoin at the bottom after missing the boat last year. Yeah, they're interested in catching Bitcoin at the bottom, so they crashed it. Okay. That's basically what I got out of that. And by Greenspan, I mean Matty Greenspan, Mattai Greenspan, or whatever. Not Alan Greenspan, the former chairman of the Federal Reserve in the 80s. 90s, I think, too? Either way. BitMEX, Goldman Sachs' official entrance into Bitcoin futures market comes after BitMEX, a cryptocurrency derivative exchange, has already been offering derivative products to retail investors. As noted by Forbes, the exchange has a daily trading volume upwards of 3 million and posted a revenue of 83 million in 2017. So a little late to the show, but certainly a lot more influential power and money coming from Goldman Sachs. So we could see prices raised from that. And the last time that futures, when futures did come about, literally the next day, they came about on the 17th of December, or maybe the 18th. And literally the next day, we saw this massive dump in price, which was part due to a lot of things. It was part due to Christmas and the New Year and the futures and all kinds of stuff that gave the ability to people to short Bitcoin. So Bitcoin's trading profile changes overnight. Despite Japan's friendly attitude toward Bitcoin, trading in Japanese yen has slowed to a trickle. And I've never been a fan of yen, of Japanese yen, because it's worth so little. It's like, to buy something as simple as like a gaming console is like 25,000 yen. You're like, what, 25,000 yen? How much is that? You're like, I don't know, like $150. So it's just as ridiculous. Like it's so inflated. Bitcoin's price is not one single entity. The price depends on multiple factors. In just a few days, Bitcoin abandoned its usual risk profile, where Japanese and U.S.-based investors set the pace. As the price shrank, first below 9,000, later below 8,500, the components of Bitcoin trading had a tidal change. Bitcoin slid by around 9% net in the last week, 84.65. The share of Japanese yen trading fell a share from 40% to just 16%. U.S. dollar volumes increased to 34%. But also remain low in absolute numbers at around 70 million in 24 hours. So U.S. dollar going up, yen going down in terms of the buying power in Bitcoin, trading power rather. Tether takes over the show. The most impressive change in the activity of Tether, the token which have a limited supply, have a growing influence on the markets. On some exchange, Tether is a safe haven from price fluctuations, though not a substitute for actual fiat. The share of Tether trading from Bitcoin deals is more than 34%, a record. At the same time, Tether trading up takes up more than 16% of all crypto deals. One of the reasons that for the recent Bitcoin drop is the belief that the hype around the Consensus 2018 conference may have caused some preemptive selling, believing that Bitcoin would be sold during the conference became a self-fulfilling prophecy. Why? Because investors are like horses and they get scared easy. If there's like a little firecracker or a snap or somebody breaks a twig, they just start bucking and kicking and selling. It could be anything. I mean, you could sneeze around investors and they're just like, and they just can't hit the sell button fast enough. It's unbelievable. Investors they're just take just any kind of scared mammal, and you could probably insert that. I like horses though. It's a really good analogy. But the drop in Bitcoin prices already started ahead of the last weekend. Trading volumes has also dwindled overall, below 7 billion in 24 hours. For now, it's unclear what causes the fluctuation. Some analysts see Bitcoin going down to 7,500. For now, it is unknown if the current trading profile of Bitcoin is just a fluke, or if it will remain the usual state of the market. While some Bitcoin selling props up altcoins, Tether remains the preferred store of value and protection against volatility. Tether also props up the price of Bitcoin Cash, where more than 29% of trading volumes happen against the token. So this is kind of funny. This isn't really news, but this is at the Consensus 2018, and it says bankers against Bitcoin. I like this one. 19% to send money to Mexico is unfair. Is fair. Excuse me. We opened all those accounts on accident. Leave Wells Fargo alone. Give us back the remittance industry. So this is clearly a joke. This must be some like hired people to go around, because there's clearly not actual bankers against Bitcoin. First of all, half the people don't look like they're actual bankers. Not to really stereotype a banker, I guess, but some of these people, yeah. Well, they look like they have suits on and stuff, but I just doubt that. Too big of a smiles on their faces. Clearly a joke. Kind of troll. 7 out of 10 troll. 7 out of 10. So OKX Exchange's CEO's sudden resignation prompts crypto industry suspicion. So this is kind of weird. So, as Bloomberg reports, citing both an emailed statement and private statement from Chris Lee's spokeswoman, the executive suddenly left his post in order to start a new life. It was his greatest pleasure and honor to work with the exchange, a spokeswoman reportedly quoted Lee as saying. The news comes following a troubling period in OKX's history. At the end of March, unusual activity in its futures markets forced staff to roll back futures contracts after it emerged. Many had suddenly liquidated and a large number of users had lost millions of dollars. So one trader even came to the exchange's head office and threatened to commit suicide with poison in an episode which became widely reported in the press. What's with crypto and poison? It's really it's a coincidence. Prior to that, OKX had felt pressure from security threats, but last month nonetheless succeeded in relocating to Malta, copying world volume leader Binance. So they just basically left and moved to Malta. They're like, yeah, we messed up real bad, and we're probably gonna have to pay big fines. But if we move to Malta, everything will be okay. Old dog, old tricks. Responding to Lee's departure, however, figures on social media were skeptical, appearing to have adopted a cool attitude towards the exchange's providence. Entrepreneur and investor Alistair Milne tweeted that, contrary to Bloomberg's assertion, OKX had become the market leader. In fact, others have since questioned the exchange was up to its old tricks, or perhaps they're up to their old tricks here. tweet by the looks of it. While Min did not give details as to which specific tricks he was referring to, the criticism appears to reference allegations stretching back to 2014 when OKX still traded only as Chinese-based OKCoin. Under the leadership of CEO Star Zhu, as a dispute arose which saw claims OKCoin was deliberately inflating its trade volumes using bots. Ooh. So Binance creator, the CEO, Zhao Chanpeng, I almost got it, who previously worked at OKCoin as its CTO, also came under the spotlight after it claimed he forged a contract at the center of another aspect of the dispute involving Bitcoin owner Roger Ver. Yeah, you should forge a contract with Roger Ver. Anyway, so yeah, definitely don't use OKX. Don't use OKX. They've been one of the top 5 notorious crappy exchanges. Don't do that. So let's check out CoinMarketCap real quick. We've seen a pretty big rise in price today, and despite the market selling, the buyer's market, only selling at about 20%. So 80% sellers and only about 20% buyers, and the price is rising. This looks a little bit of a whale purchase to me, since this occurred in about, let's go with just about 10 minutes that this occurred in. So, usually people just don't all pump in at once like that. So this kind of looks like a whale purchase to me. So I'm definitely betting that this will dump at least that same value, which really was only like $400. So that's not too bad in terms of Bitcoin. So when we're seeing a little dip here, so we lost about $100 or so. We're looking at a market of about 404 billion. At the all-time high, I believe we were at something about 800 billion. So we have a long way to go. And so we've been fluctuating between 380 billion and 450 billion for a while now, for a good couple months, as the price just decides what it wants to do. But again, this looks like a whale purchase to me. It doesn't look like it's going to last very long. Could be wrong. Hopefully, I'd like to see the prices go up. And actually, in fact, I would like to see the prices go down real quick so that I could buy more coin. But either way, that's just me. So if it goes up, all my stuff is worth more. If it goes down, I just buy more. So either way, I look at it positively either way. Like if it's crashing, I'm not one of those people that are like, oh my God, the market's crashing. I'm just like, yes, get under $100, with Litecoin. So that I can buy a greater share with just like $50. I could buy like half a coin instead of just buying like a third or a fifth of a coin when it's really high. So great. I'm not saying I'm just only going to put in 50, but either way, I do a little DCA, and I like to just do $50 every once in a while, like every week or two. And just accumulate a little bit more Litecoin. When the market's down, after the market goes way down, I'll buy a whole coin. That's not a problem. But so for the most part, we see about half and half here, a little bit majority red. And so it's just that little recent dip. And as you can see, all coins are doing it. So, when Bitcoin goes down, all the other coins follow. You can see that tiny little dip right at the end of each coin here. And very few continue to go up. Tether here, it kind of is. VeChain going up a little bit there. But for the most part, most coins follow along. So Zcash is way up. Interesting to see. So that was probably why my miners were making a sudden little burst in extra, and that makes sense because it went way up and then it went way down, as I like to mine Equihash. So Bitcoin Private still on the way down. Anybody that invested into Bitcoin Private, I'm sorry, because it's not, I just don't think it's going to go anywhere. Maybe when the market all rises up again, but even with the rising market, you can see Bitcoin Private totally missed that rise completely that we saw today with that little whale purchase, if you will. Zilliqa down a little bit as well. So our loser of the day is Ox, and winner of the day is Zcash in the top 100 anyway. Again, that's just top 100. So if you go to the next 100, like 101 to 201 or whatever it goes to here, the 200. We can see that DAT was the winner and Nexo the loser here. So it depends on how you look at the chart to see the winner or the loser of the day. But I hope you guys enjoyed this episode, and as usual, I'll see you guys next time.